Build your dreams, live rich, and leave rich.
Hello and welcome. When we talk about living rich, we're not really talking about fancy cars or expensive holidays. Not at all. We're talking about something much, much deeper. A life with true peace of mind. A life where you're not constantly worried about money. And today, we're going to unlock one of the most powerful ways to achieve that peace by making sense of the stock market together. All right, before we dive in, a quick but very important note. Everything we discuss here is for your education, to build your understanding right from square one. You have to remember, investing always comes with risks, so it's absolutely essential that you talk to a SEBI-registered financial advisor before you make any decisions. Our goal today is to arm you with the right knowledge so you can have a smart, confident conversation with that advisor and be a true partner in building your own financial future. For so many of us in India, this is the story we've heard our whole lives, right? That the stock market, the Wall Street, it's just a big Satta bazaar, a giant gambling hall where hardworking people like us go to lose all their savings. It's painted as this super complex game rigged by insiders in suits and totally out of reach for the average person. Well, today we're going to tear that myth apart. So here is my promise to you. Just give me your focus for the next few minutes, and I promise we will pull back the curtain on this whole thing. You'll see exactly how the biggest companies in India raise money to build and grow. You'll finally understand why those prices blink red and green every second. And most importantly, you'll see how you, yes you, right from your phone, can go from being just a customer to an actual part owner of the brands you use and love every single day. Okay, let's break this down with a simple idea. I want you to think of the stock market as a giant digital sabzi mandi. You know how you go to the mandi to buy your vegetables? Potatoes, onions, whatever you need? Well, the stock market is exactly the same. But instead of buying vegetables, you're buying tiny slices of a business. So instead of a kilo of onions, you're buying a small piece of ownership in a company like Tata Motors or Reliance or HDFC Bank. It's just a marketplace where buyers and sellers come together to decide on a fair price. That's all it is. And what do we call this tiny slice? It's called a share. Now, a share is not just a number you see on your screen. It is a real, legal piece of ownership. When you buy even a single share of a company, you legally become a partner in that business. So think about it. When that company does well, when it sells more products and makes more profit, what happens? Your little slice of ownership becomes more valuable. That's the core idea right there. Okay, that makes sense. But where do these shares even come from? They don't just appear out of thin air, right? They have to be created somewhere. And that brings us to our very first lesson, the birth of a share, which happens in a place called the primary market. Let me tell you a quick story. Imagine there's a great family business called Bharat Footwear. They make fantastic shoes. Everyone loves them. Now, the owner has this huge dream. They want to grow from just 10 stores to over 100 stores all across India. The problem? To do that, they need a huge amount of money, let's say 100 crores. So they come up with a brilliant plan. They decide to slice their whole company into millions of tiny equal pieces. And for the very first time, they offer these pieces to the public. They basically say, hey everyone, help us raise the money to build our new stores, and in return, we'll give you a slice of ownership in our company's future. This very first sale is called an initial public offering. You've probably heard the term, an IPO. Now, this is absolutely crucial to understand. The primary market is where shares are born, and it's the only time your money goes directly into the company's bank account. This is how your savings can literally help build a nation. You're not just trading something, you are providing the money for a company to build a new factory, to hire more people, to create the next big thing. You go from being just a consumer of products to an active partner in progress. Okay, so let's say you bought a few shares in the Bharat Footwear IPO. Fantastic. But what if 5 years down the line, you need that money back? Maybe for a down payment on a home or for your child's college fees. You can't just call up the company and ask for a refund, right? So, how do you sell your slice? Well, this is where the everyday magic of the secondary market comes into play. In India, we have two huge, safe, and regulated digital marketplaces. You've heard their names, the National Stock Exchange, or NSE, and the Bombay Stock Exchange, BSE. This is the secondary market. And the key thing to remember here is that the company isn't involved at all anymore. This is now a place where investors trade shares directly with, well, other investors. It's just a secure platform where if you want to sell, you can find someone else who wants to buy. Simple as that. Now, you can't just knock on the door of the BSE building and say, "Hi, I'd like to sell my 10 shares, please." It doesn't work like that. You need a registered and regulated guide to connect you to these big exchanges. And in today's world, that guide is your broker, which is almost always a simple, secure app on your smartphone. That app is your personal, safe gateway to the entire Indian stock market. All right, let's tackle the one thing that scares most people. Those prices, constantly blinking red and green on the screen. It looks so chaotic, so complicated. But I'll let you in on a secret. It's not really about complex financial math. It's about something much simpler, basic human psychology. It all comes down to two simple forces, supply and demand. Let's go back to our Bharat footwear story. So picture this. They release amazing news. Their profits have totally doubled. All of a sudden, everybody wants to own a slice of this winning company. The demand just shoots up. But the people who already own shares, they don't want to sell a winner. So the supply is very low. What happens? To get a slice, new buyers have to offer a little more money to convince someone to sell. The price inches up. Now, flip that. Imagine bad news hits. A big foreign competitor enters India. Suddenly, owners get scared and they all rush to sell. There's a flood of supply, but not many people want to buy. So to find a buyer, the sellers have to keep lowering their price until someone says, okay, at that low price, I'll take a chance. The price goes down, and that's it. That is the entire drama you see blinking on your screen every day.
So we get how one company's price can go up or down. But what about when you hear on the news that the market was up today? What market are they even talking about? How do they know the health of the entire Sabzi Mandi?
I mean, think about it. There are more than 5,000 different companies listed on our stock exchanges. It would be literally impossible to check the price of every single one of them every day to figure out if it was overall a good day or a bad day. We'd go crazy. We need a shortcut, a simple scoreboard. And that clever shortcut is called a market index. The best way to think about an index is like a thermometer for the market's health. You don't need to analyze every single particle of air in a room to know if it's hot or cold. You just look at the thermometer, right? An index does the exact same thing for the market. It just picks a small group, a basket, of the biggest and most important companies and tracks their performance. And the most famous index in India, the one you always hear about, is the Nifty 50. As you can guess from the name, it's a basket that holds the 50 biggest, most powerful companies in the country. We're talking about the titans, the backbone of the Indian economy. Companies like Reliance, TCS, HDFC Bank. The logic is really simple. If most of these 50 giants are doing well and their share prices are going up, then the Nifty 50 goes up. And that's when the news anchor can say with confidence, the market had a good day today.
Whew, we have covered a lot, so let's just take a moment and lock in all this new knowledge. We're going to do a quick rapid-fire jargon buster to make sure the most important ideas are crystal clear.
First up, IPO. That's just a company's very first sale of its ownership slices to the public to raise money for growth. Next, shareholder. That's you. You are an official part owner of a business because you hold its shares. And finally, broker. That's just the safe and secure mobile app that connects you to the stock exchange. And what about those animal names you always hear? A bull market. That's just a fancy way of saying it's a time when everyone is feeling optimistic and most stock prices are going up. Think of a bull charging, horns thrusting upwards. And a bear market is the opposite. It's a time of pessimism when most prices are falling. Think of a bear swiping down with its claws. It's just simple shorthand for the market's overall mood. So let's bring all of this home with one final thought. I want you to think about your day. You wake up, you use products, you pay your mobile phone bill, you put money in a bank. Every single day, you are a customer of these huge companies. You are giving them your hard-earned money. And that leads to the most important question of all. Are you going to spend your entire life just being a customer, helping these great companies grow with your money? Or are you ready to learn how to become their owner and have a chance to grow with them, to participate in the wealth they create? The choice, as you now know, is completely yours. I really hope this has helped you see the stock market in a new, clear light. If it did, please consider subscribing to the channel and like and share this explainer so it can help empower someone else you know. For more tools and resources, you can check out the Legacy Diary. The link is right there in the description below. Thank you so much for your time. Remember our goal: live rich and leave rich.